Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Options, and I'll be facilitating the session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. Alrighty, so as you'll see on the screen, there's only one method for asking questions for this session, and that's going to be written through the Q&A. So we are live streaming to multiple platforms per usual. So the format of this is Rob's going to go through his general presentation, go through some case study considerations, and with the time remaining, we'll open it up to a combination of questions from all of the live platforms that we are streaming to. So the question portion is limited for this session. If we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. So again, I'll be selecting questions at random from all of those platforms when we get to that portion. If we don't get to your question, also take that as encouragement to attend the insiders meeting that we have every Thursday night. That's for our paid subscribers only, and there's a 45-minute Q&A portion there. So obviously a much higher likelihood of getting your question addressed in that session. We have the chat window as well. Any support related queries I can handle in there. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. For our Zoom audience, by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the "to" at the bottom to everyone. Lastly, if you want Rob to potentially address your question, please be sure to write it in the Q&A window and not the chat window. All right, with that, I think that covers off all the important details. The market ran up and hit 4,000 and then it backed off. So is that the end of the run or is there more to go? I'm interested to hear Rob's thoughts on that. Excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce who we're all here for, the man of the hour, and that's Rob Roy.
Hi, everyone. Welcome to TradeFinder Live. Look forward to going through this session. Just finished another educational session from a brokerage firm earlier today. So lots of education coming out from Elliott Options. Today, we will go through and talk about the market. As Zach mentioned, we'll go through the international markets as well. We'll do a review of any case studies that we've closed for our Elliott Options alert subscribers, give you an idea of how that works. We'll review the case study considerations that we've identified in previous trade finders. We'll see if we can find one for tonight. And then with that, we will leave the rest of it to the general Q&A with whatever time's left. So let's go ahead and take a look at the charts. As Zach mentioned, the market ran up to 4,000, so that's 400 on the SPY. And we did reverse and back off a little bit. But as you can see, basically, we were a bit overbought on the high of the day. So I don't think the reverse, in fact, I would have expected more of a reversal today, coming back down towards that 10-day moving average. And it didn't happen. I think it was a pretty constructive day in the markets. An interesting thing that I heard on one of the financial networks is somebody used the analogy that 4,000 is like a brick on the head of the market right now. And first of all, I thought, what an analogy to use. And secondly, I'm not sure that I feel the same way as far as the importance of 400. To me, it looks more like 410 up here, 4,100 is more of an area of resistance. Yeah, there's some congestion through here at the 400 area, but the peak at the end of November, beginning of December was right at 410. It went up again in the middle of December. So we've already broken above that 400 level a couple times. I'm not sure how that is acting as a brick on the head of the market. So I think we move up to 410 and see what happens there. That's just my opinion. And then we have this zigzag that we introduced last week here that's still qualified. This is the more recent one. There's still that big downward zigzag that is technically qualified as well. But this is the more recent one, so we'll focus on this. And that gets us all the way up to 436 if that plays out. So we'll see how things break. And again, if we move down on a down day tomorrow, I don't think that has anything to do with the 400 level more than we're overbought. And so by this separation from where we closed in the 10-day moving average, we could pull back. There's been nothing really exciting coming out of the Davos meeting. Sometimes we get some headlines out of that that move the market. So far, that hasn't done anything. Perhaps something comes out tomorrow. We'll wait and see, but nothing really thus far. And then we'll move on and take a look at interest rates. And there's the 10-year. And you can see that wave 4 at the 61% fib level is holding pretty strongly. We've moved down, and now we found a little bit of support at this congestion right here at the 35 level. We did try to break it, no follow-through day. You know how that works if you've been watching. You have to have a follow-through day confirmation. It didn't, and so back up we go, back above 35. And I don't know, did that have anything to do with today's move in the markets? I don't think so. Today was just to me, a constructive day. When you come back down towards the 10-day moving average, the worst thing that could have happened, I think, as far as a bullish scenario, is if we would have run higher today and gotten too far away from the 10-day moving average. Then we would have had a stronger or more vertical correction, I think. So I thought today was very constructive. Others apparently felt differently, but the next couple of days will tell us more, won't it? But as far as the 10-year interest rates settling in right here, if interest rates do start to consolidate, even if we go down and hit this wave 5 low, but don't go below that, I'll be concerned if we break this level and start really moving down. That means a lot of money is moving into the bond market. That's more than just the bond market pricing in the end of Fed rate hikes. That's money running to hide in the bond market if it pushes rates down that far. So if that occurs, I think that we're in for some pretty serious economic problems. But if we consolidate through here or break down and hit that wave 5 target, any of those scenarios, again, not lower than that wave 5 target, just coming a little lower than where we are, I think all that's very constructive for the market moving forward. But you just don't want to see, I know it sounds weird, you don't want to see a big move down in rates, but you want to see some holding in here to, it shows the health or potential health of the economy if we don't have a big rundown in rates. The dollar is backing off, as we talked about last week. I really don't like the vertical nature of this as much as I'm in favor of a strong dollar, but not as strong as it has gotten. I've said that numerous times on different platforms, but this vertical move down here, and it's even a little bit vertical here, I don't like that. I don't want to see that kind of move in the dollar. I just would like to see more of this 45-degree angle move lower here, continue that kind of a move down. And as long as we hold above the 96 area, I think that's constructive for the market as well. The same thing is with rates. You don't want to see a big tanking in the dollar, meaning people are losing faith in the dollar as the currency of last choice. You don't want to see that happen either, but coming off of the highs, giving international companies a little more breathing room from the exchange rate is helpful, obviously. And then we have such a global economy these days. So that's it for those markets. To take a look at the rest of our markets, the diamonds backed off a bit today, a little bit more than the S&P did, but we put the 10-day moving average on. You can see we came down to the 10-day moving average on the low. Interesting is that we weren't as overbought on the diamonds as we were on the S&P. And so to see it come down more than the S&P did, what does that mean? Is money moving away now from the safety or perceived safety of the Dow and moving back into the S&P and the Qs? It could be. There is resistance right here at 340. So having some churning back and forth here is not surprising. But can we go up and hit that wave 5 target? That would coincide with the completion of that zigzag on the S&P. So as long as we stay above the 10-day moving average, a little ping pong back and forth here at the 340 level, I think is quite warranted in the markets. Let's take a look at the Qs. And as I said, curious to see if money is leaving the Dow and moving into the S&P and the Qs, which is, as I mentioned, possible. You can see a better day in the Qs than we had in either the S&P or the diamonds. And I think that's constructive. How many times have we talked about that the Qs were going to underperform, and then when the Fed stops raising rates or we start looking towards that, that's where the easiest money is going to be made, or the money is going to be made the quickest, is looking at the Qs because it underperformed so much on the way down. So we've held 260. We put a little distance between 260 and where we are. Now we're at a bit of what I thought was going to be resistance, and it still might be. It's kind of a quasi doji that we have there today, but some resistance here at 280. I'd even surmise, are we going to have a trading range here? Are we going to break out? I'd asked that in the weekend update and what people's thoughts were. Are the Qs going to break out and take off and run, or is that going to act as resistance there at 280 and we move into a trading range, or even attempt to break? It doesn't look like we're going to break 260 on the downside. That doesn't seem to be in the cards right now. So moving up, we are, as we are with the S&P, a bit overbought on the Qs. So not overbought on the Dow, but a little overbought on the Qs and the SPY. And that makes sense if money's leaving the Dow to move into these other markets and they're performing better. I wouldn't be surprised to see a little bit of a pullback in both the Qs and the S&P tomorrow. In fact, I think that would be really healthy to get back to the 10-day moving average. You can see the 10s crossing the 30 now. That's a bullish signal as well. We're back above the 50-day moving average. It's getting pretty interesting here. And there's still a lot of doubters out there, and that's fuel for the market to move to the upside. I saw somebody wrote in on the weekend video, the market update, that the put call ratio had gotten almost historically high, and isn't that bullish for the markets? And it is. That means everybody's buying puts. Nobody believes in the rally, and so that just gives fuel to it. When everybody's on one side of the trade, remember, the market always goes the other way, because that's the path of least resistance. That's how things work. So interesting there. The IWM, can we get above 190? Hit the wrong button there. Let's try it again. So on the IWM, boom, almost, and a little bit overbought here. So we need some backing and filling here, I think, on the SPY, the Qs, and the IWM, not on the Dow. The Dow's not overbought, but these other markets are. And this is a little bit vertical, so this would be concerning. That's kind of a vertical run up there towards 190. You don't want that if you're bullish on the small caps. If you want to see the IWM break this 190 and take off and run, that's too vertical for that to happen. So it needs to come back, and coming back to the 10-day moving average would be ideal. Even back to that 180 that it's gone back and forth between 180 so often, that's actually a bit of a support resistance area within the larger trading range of 170 to 190, which is support resistance. So all kinds of consolidation going on here between 170 and 190, with the midpoint being 180, obviously, but as well as the chart pattern as well on the IWM. And we talked about Bitcoin. We said, hey, we finally have something to talk about Bitcoin. Some of you poo-pooed it on the weekend update, but that's significant. And we did, and we actually have a video posted on our YouTube channel. So those of you live streaming, if you are on YouTube and you haven't visited our channel, please do so. Elliott Wave Options. And we had a seminar last week where we talked a lot about Bitcoin and cryptos, and getting above 20,000 was key. And you know, I know it doesn't really gap because of the fact that it trades 24/7. I understand all that, but you have to have, you know, a ending point, and with the holiday yesterday, etc. So it shows a little bit of a gap here. That's just because of the end of day data. It didn't really gap, but moving above 20,000 is important. And now we look to see, can we get to 24? The problem is we're overbought here as well. But if we come back down, can we hold 20,000? That would be really key. The halving that it's in the video if you want to read it, is expected to be around April of 2024. But there's some really good data in that video that shows that about 12 months prior to each halving period is when Bitcoin has bottomed. So have we bottomed? Well, we're not quite 12 months away from April of 2024, but we're 15 months away. So we're not that far away. And that's just an expectation of when it's going to occur. So the point being that the crypto world, Bitcoin, begin to look ahead of when that halving is going to occur. And every time so far that it's occurred, it's taken off on a run. So that's why you're starting to see a bid come in. I think on Bitcoin, I know Zach is really happy about Ethereum making a big move as well, since he's a Ethereum owner. And so now we just look to see, how do we handle this overbought scenario? Do we run straight to 24,000? Do we back and fill? Again, same thing. From a technical standpoint, you want it to go just back off and hold 20,000, let the 10-day moving average catch up, do some consolidation there at 20, and then run to 24. If we run straight to 24 and separate even further from the 10-day moving average, same thing. You're too far overbought, and that tends to yield to a more volatile corrective move, and you don't want that. You want this to climb up. But more to talk about on Bitcoin in the crypto world than we've had in a very long time, and perhaps not hearing about FTX every single day has been helpful there. I know it's helpful to the ears and psyche, because the media just beats it to death. So looking at the EWA, and we will look at the XJO real quickly as well. A lot of you have asked to look at both of those. For a while, they weren't in sync. Now they are. Again, overbought. So some bagging and filling would be ideal. We talked about this in Thursday night's insiders meeting, which is the one we do for our alert subscribers only on Thursday nights. We have an extended Q&A. We identified this. Remember, the markets were closed yesterday, so we identified this overbought scenario last week, and it's still there. And so if we take a look at the XJO, so the Aussie market along with our markets would be healthy if they backed off a bit. And if you're trading the XJO, which some of you are because you ask about it, I know most of you like to trade the EWA because it's easier to trade for the average trader, but that's too vertical. I don't like that, and that's concerning, that vertical move. So far, so good on the sideways consolidation that we haven't backed up. Remember, when you get overbought, two things can happen. You either come back to the 10-day moving average in the case of being overbought. Oversold would be the reversal the other way, obviously, but it either come back to the 10-day moving average, or you consolidate sideways and allow the 10-day moving average to catch up. But one of those two scenarios happens. No security in any time frame, gets very far away from the 10-day moving average. That's a rule. That's a market rule. It just doesn't happen, not for very long. And then when you add in the vertical nature here, that's when it becomes concerning about perhaps a more vertical move to the down, or a more volatile move to the downside, a stronger corrective move, if you will. But so far, so good. Sideways for a couple trading days and allowing the 10-day moving average to move. If it can handle that without a serious move back to the downside, that's super healthy for the Aussie market. And we break above this previous wave 3 high, which is also acting as resistance. And then we could have a run to that wave 5 target there. So looking pretty strong there in the Aussie market, just overbought short term. A small pullback would be fantastic. And here we have the EWC approaching that recent wave 3 high, a little bit overbought there as well. Man, thought that might back up. None of the markets backed up today as they thought they might, especially coming out of a holiday weekend. The markets closed, but moving to the upside here nicely and a little overbought. So same thing, a little tight, little small doji there. So I think it's likely you see a bit of a pullback there in the next day or so, or maybe we just consolidate at that 35 level. The wave 4 held on at the very last bastion of fib support there at 78.6, just barely, but so far it's worked out pretty well on the EWC. The INDA, which had been the best performer in the market for so long, is trying to play catch up here a little bit, I think. But then you could argue that, yeah, but it had made these two highs when the rest of the world was really struggling. And so now we're just moving back towards that level. And this is the kind of move that you want, just this creeping up 45-degree angle move, because that tends to hold. and you don't get the more volatile corrective moves. Remember when we were back over here and we had this nice move up, and I didn't like the fact that that was vertical. It looked like for a while that it consolidated it really well, but another rule is vertical moves get retraced. And so we went vertically up, and here we came back down. But that was a vertical move down, so that got retraced. And so that's another market rule. This is better when you go through this 45-degree angle. You have corrections. The market always goes through impulses and corrections. That's the backbone of Elliott wave. And that's why we like to look at it, because that's how the market works. But when you go in a 45-degree angle, the corrective moves are less severe, and those tend to hold more and don't get corrected as hard as vertical moves. That's my concern with the Aussie market right now. And the EWG, we were been kind of joking last week that it's nice to see some bullish stuff to talk about, and it keeps powering ahead. So that's, I think, is the same scenario as the Qs. It's so underperformed in the global markets for so long that it's got a lot of catching up to do, and it's trying. But again, too vertical, I think. I don't like this vertical stuff right here. And so starting to back off, you're hearing, what could cause anything to disrupt this. You're hearing China reopen. They did their zero COVID thing for so long. They finally gave up on that. So they reopened, and now they're just exploding with COVID cases. And the concern, and I'm not a doctor or even in the healthcare industry at all, never have been, but from what I'm hearing from friends that are, is the concern is because of this explosion, it's a breeding ground for more of the variants. And we got that XBB or whatever that seems to be resistant to even the boosters of all the vaccines, et cetera. So that could be a black swan out there that could derail things if some sort of a big explosion of a dangerous variant. The thing that happens is, at least the way I understand it, is the variants come out and they become more contagious but less severe. So more people get the variants, but the outcome is not as severe. There is some worry that this XBB one may be a little more severe than some of the normal variants. But anyway, who knows when it comes to all that stuff. I'm just jawboning here on things that could change the scenario. The market's priced in what the Fed's going to do. It's pretty widely viewed, I think, that the Fed's going to go too far. We've talked about that here for a really long time. I still feel there's a possibility, seems less likely now, but I still feel there's a possibility they go from a rate hike to a rate cut in consecutive meetings. They've done that before. Maybe that doesn't happen. But regardless, it's being priced in that the Fed is probably going to go too far on the rate hikes, et cetera. And, where's something that hasn't been priced into the market? Remember, the market always looks 6 to 9 months. Some people say 9 to 12 months ahead. I always say 6 to 9 months ahead. So we're already looking past the end of the rate hikes. And that's what they're starting to look at when we can get to the rate cuts, even though not a single Fed governor, they said that they thought there would be a rate cut this year. They changed their mind like crazy. So, the data is going to bear that out. But Germany, nice move there, just smacking that wave 5 right in the middle of the tap box. But again, a little bit overbought. So let's just relax here, go sideways, consolidate. Some consolidation in the market, if not a little backing and filling, would be really healthy right now. And too much of a more vertical move, and then we're set up for a more volatile correction, I think. It was mentioned in the comments on the YouTube video on the EEM, thoughts on that. And so let's take a look at it. You can see that we've come back from the wave 5 low. That wave 5 low did not extend past 100%. So when that happens, you expect in Elliott wave rules that you retrace back towards the wave 4. The previous wave 4 is what normally happens. And so we're making a nice, and this is a good constructive way for the market to move, a little vertical here, but it's consolidating that rather nicely. And if we take the moving averages off, clearly you can see that zigzag. They're everywhere. The market is just full of zigzags right now, and we just finished the Zig-Zag Mastery. We have that education on our website if you didn't get a chance to attend that. So we're now at the 61.8% level, and call it the 38.2% B wave correction. The issue here is that's where it's supposed to go. So when you have a B wave correction at 38.2, you're supposed to go to 61.8, and we're there. So this zigzag has done exactly what it's supposed to do. Now you start to look to say, okay, what is the possibility that the C wave extends? Again, it's hit its target. It's done what it's supposed to do via the rules, but sometimes we get an extended C wave, and that's happened quite often over the past year or two, both to the upside and the downside. So the expectation would be on an extended C wave to go to 43.8. So we like to look at the DMI as a confirming indicator to say, hey, what is the likelihood that we do go past that target level and extend to the next fib level? And when you look at the DMI, it looks pretty strong. What that DMI is telling you is that there is strength to this move. And so when you see a good constructive DMI like that, it tells you there's strength to the move, which means it's likely to continue until the DMI tells us that we're overbought. And it's not saying that right now. So there's a good, strong likelihood that we do move to that 43 level. So those asking, what about the EEM as a place to be? I think it looks really, really good, and almost sent out an alert for our subscribers today. But when you take a look at the 10-day moving average, again, I might be being a little bit picky. Wanted to send one out on NVIDIA today, and we're going to look at that when we look for our case study consideration, because it's on the search. But gosh, it's got a little bit overbought too, up almost $8 today. And I might be trying to be a little too cute here. Not too cute, but a little too perfect on these. There is an argument that when you see a move, even if it's an extended one, because they can stay extended for a short period of time, just not long periods of time. Remember, the no security in any time frame gets far away from the 10-day moving average. Not for very long. So do you come in with like a half a position, and then if you back off, then you add the other half? We'll look at NVIDIA, and I'll tell you what I mean by that when we get to looking for our case study for tonight. I know Zach will be excited about that because it's another one of his favorites. So this is Zach's night, I guess, with Ethereum and NVIDIA doing well. So I wanted to show you that, and that does look really good. So that's my response to the question on YouTube about the EEM. All right, just a review of our previous case study considerations here. Well, let me show you one of our alerts from our Elliott Wave alert service. And so that's EWOTrader.com if you're interested in it, especially with the markets becoming a bit more constructive now. What's the likelihood that we continue to move in a directional bias? I think really strong for 2023. I think it's going to be a really good year trading wise, coming off of two of the most difficult years. I read somewhere where last year was one of the most difficult years on record to trade. And that doesn't mean because we had some downward moves. We've had corrective moves before, but from 2000 to 2002, when the market went down, we had the big run up in 1999 or a little into early 2000, and then we had basically a 2-year correction. I made great money on the downward move from 2000 to 2002 because it was just kept going down. It was a nice trending move. It's been so choppy. That's what makes trading difficult when you don't really have any decent trends to sustain. So you have to jump in and jump out, pick and choose, and that's what we've been doing. But here's one in our time strategy on SHLS. We actually just featured this in our 2-minute trade review that's on our YouTube channel as well. So you can see the setup here. We like to look at calendars, butterflies, and diagonals in the time strategy. We do a lot of calendars. In this case, a butterfly made a lot of sense because you can see we had really good support there at 20, and then we had some resistance there at 30. So there's your support and resistance to set up a butterfly. It gives you a pretty wide range to stay in between. And so you can take a look at it. There was the butterfly, 22.5, 25, 30 was the setup on the butterfly. And then when we take a look at the move, look what happened. Great consolidation here, which helped. Normally you need some time to go by in a butterfly. That's the negative on it. As the positive is you benefit from time decay if you stay in a trading range. The negative is it takes some time to go by before it starts to generate a gain. but we had such a tight consolidation here right around the midpoint that we started to generate a gain pretty quickly. And then we started to break a little bit out of this triangle. And when you see a triangle, you know, I feel Elliott always talked about it, triangles, they can break either way. So you don't pick a direction. It looked like it wanted to break to the upside. We didn't want to hang around and wait. So without waiting for follow through, whatever, we went ahead and took the gain. To generate a 28% gain in a butterfly in just 10 days is unusual. So it was nice to be able to generate such a nice gain in a relatively short period of time. Normally you need more time than that to go buy in a butterfly. It's a great strategy. We love it. We like to make them directional as well. But in this case, with our time strategy, our AI-based time strategy, true AI, continuing to evolve and learn, that's a really nice gain in a short period of time. So that worked out great. So when we have the time strategy working, which has been, and we start to get some more directional moves, you can see the excitement about trading for 2023. All right, so looking at Monster Beverage, remember we looked at that back on 11/22, and we knew at that time that it was a little bit overbought. We've talked about this before, and we've said, hey, as long as it stays above 100, hang in there. It tried to really make a move today, but again, just the markets are just a little too overbought, I think, for it to sustain that. But look where we are. We're back where we were when we first looked at it. We've held 100. You know, this could end up being a good one in the end when it's gone nowhere for a number of weeks. And then Netflix. So we looked at Netflix here, and that was on 12/13. And we looked at Netflix and watch this. Boom. So we made a new high. Isn't that interesting? We came down here. It looked like, oh, you got to get out. It's going the wrong way. And that's why we talk about when the pattern stays there, patience, trust the pattern. We did break below this 280 level once. We said that needed to hold, but it didn't follow through. There was never a follow through day. Had it followed through to the downside on 280, that would have been a signal to exit, but it didn't. Now we've made a new high. We backed off a little bit today, but yesterday was a new high from the entry. Isn't that amazing from where we were with Netflix? It's almost like worth looking at for a new position as well, because look at this DMI. It's setting up well again. Don't like that tick up in the negative DI. Obviously, we moved down today, but that's because we were overbought on Netflix as well. But we're right in that tap box, and we're also at the 61% fib level, natural point for a little bit of resistance. So maybe we just keep an eye on Netflix and see what it does over the next couple of days. If it backs off, then that's a different story. But if it holds here above 320, holds that 10-day moving average, that's not 320. This is 320 right here. So if it holds above 320 and holds the 10-day moving average and the DMI continues to look good, I think Netflix may run to the next fib level. But this is a logical place for Netflix to have some resistance in the wave 5 tap box, the resistance from the 61% fib level and being a touch overbought. So I think maybe we just keep an eye on that one for a day or two, and there'll be plenty of room to move if Netflix continues to the upside. So that was pretty interesting. And then last week we looked at Abbott, and remember we had small moves. We wrote down we did Abbott and Deckers. We said we wanted small moves there. This is supposed to go back to the 61.8% fib level because in this case the wave 5 did extend past 100%. So it went to 166. So when the wave 5 extends past 100%, you don't look for a rebound all the way to the previous 4. It doesn't mean it can't, but that's not the target. The target is a 61.8% retracement, and that was our target. And boy, we almost got there. We didn't quite. So we got to a high of 115.69. That was a little bit overbought on that move, and we're still a tiny bit overbought. So to me, as long as we stay above 112 here, hold this 50% level, we stay in. Because normally these lines get touched. I know you can say, well, gosh, it got within 31 cents. That's not good enough. It is close, but normally the lines, these fib lines actually get touched. And I know it's tempting when you go up there. It would have been tempting to take that off. And maybe some of you that follow this did. I don't know. Because, you know, with the alert service, the difference is we send out alerts on entries, any adjustments, and exits. When we do TradeFinder, we identify considerations, and then you're on your own. That's the difference between what we do at TradeFinder and our alert service at EWOTrader.com. We kind of take you by the hand through the whole thing. on the alert service. But I just feel like you hang in there and see if that 61.8% level doesn't get hit. So we're going to leave that one for now. But with Deckers that we looked at last week, watch this, bam, that one hit its target. So past the 100% level, but that's what we were looking for. So nice gain there in Deckers. That was a good one. And so we're going to leave that one. Or excuse me, we're going to take that one off. We'll leave Abbott, but we did 2 as a bonus last week because we're back from the holidays. So we'll keep Abbott, see if we don't hit that the 61.8% level at 116, and then Deckers. You're being greedy if you're not out yet on Deckers. A little bit overbought now. I know the DMI still looks pretty good, but that was our target. And so when you have a trading plan, you're tempting fate when you say, okay, well, that was my plan, but I think it's going to go higher. Well, why didn't you think that in the first place? That should have been factored into the trading plan initially. So I think we follow up our plan. We stay with that. So I'm saying take the gains there and move on. But you make your own call, obviously, along those lines. All right, so looking for a case study consideration tonight. Let's look at NVIDIA and see what you think, and then I'll pull up the search because this was on it today. And I mean, how good does that look? And we wanted this DMI to trigger, and it did. So we talked about this in the insiders meeting Thursday night. We were looking at this. Somebody asked about it in the Q&A, and the ADX hadn't quite broken 20 yet. Well, now it has definitively today. But look at where we are. I mean, the DMI can't set up any better than that. The CCI is still showing a little bit of room before you get to an extreme point. So everything looks great, but it closed on the high of the day. And there's the 10-day moving average all the way back down around 160, and we're at 177. Man, that's a lot of separation. So again, I might have been being a little too picky by not sending that out as an alert to our alert subscribers today. I literally had it queued up, ready to go. But you follow your rules, and it's just to send it out knowing it's overbought. Do we want to go through the same thing? I mean, we kind of made that mistake with Monster Beverage, but it looked good. We knew it was overbought at the time. That's what happens when you don't follow your rules. So let's see if this doesn't back off a little bit. The markets need to do some backing and filling. I think NVIDIA it might hit 180 beforehand, but I feel like we'd get a better entry than where it was today. And I might be wrong. I'm wrong a lot. So I might be wrong on that as well. But if you guys want to do that, I'm going to ask Zach, you guys send in messages to the Q&A. Sorry, Zach, to bombard you with that, but you guys decide. Do you want to do it anyway, or would you rather wait? We'll do whatever you guys want to do. TradeFinder is for you guys. So if you're like, forget it, it doesn't matter if it's overbought. Look how it's going to 200 anyway, or above, probably 210. So if it backs a little bit, that doesn't worry me. I want in now. If you want to do that, we'll make it the case study consideration for tonight. Or if you want to wait a couple days, then you got to follow it, because I don't think that's going to last until next week, until we're together again. So I'll leave that to you guys on what you want to do there. But in the meantime, while you all are sending in yes or no on NVIDIA, just write yes or no. Don't write in novels for poor Zach. But let's take a look at the impulse strategy here. So Abbott Labs, holy cow, that one's still there. See, we just talked about stay with that one. It's still there. So that's interesting. That's good. Costco. Now we've been waiting on this one. We actually have an alert on this that we've been waiting to add to because of the move lower. And I like seeing that. So that says that, and again, is the market going to pull back a little bit? Maybe, but you can see the reformation here of the DMI. Look how that changed, where the ADX was moving up in a negative scenario. And then you got this vertical cross here on the 6th of January, and a nice consolidation there at 480. Was watching that to see if we were going to back up, because you know what's going to happen. That gap's going to get filled at some point. Hated that gap, man. Wish that gap would not have been there. If it hadn't been there, we'd be in that one already with an adjustment and adding to this. But that looks, it looks pretty good. It is in a wave 5 pattern to the downside, so that's something that we have to consider. Is it going to run and break that pattern? So if you don't like that, I understand. The DMI is saying that we're likely moving higher. That doesn't mean that this 5-wave pattern to the downside can't still exist, especially with that gap there. But it looks like we're passing the 38.2% fib level, which held for over a week. So we broke that today and made a new wave 4 high. Remember, we can run all the way up to 61.8 and not disqualify this 5-wave pattern to the downside. So that's one thing that I think confuses people when you put on a bullish trade and you're in a 5-wave pattern to the downside. The 4 corrective wave is to the upside in a 5-wave downward pattern. So if your supporting indicators are telling you, hey, that wave 4 is likely to go higher, you don't have to stay away from a bullish trade because it's a 5-wave to the downside pattern. It's something to consider, but you take all the pieces together when you take a look at it. But if that's concerning to you, I get that. MPWR, this one sometimes has some good patterns. We've had alerts on this one in the past. That looks, oh wow, that one looks pretty darn good. That's probably going to be it. That's going to be tough to beat. I'll ask what y'all said about NVIDIA here in just a second, Zach. But looking at this, you can see that we are right at a ton of resistance here at 400. The DMI is really supportive that we're going to break that. We've gone sideways for 3 or 4 days here after being overbought. Is that a gap? The high was 370.62. The low, yeah, there's a little bit of a gap there. Man, these gaps, I hate those. But this looks like it wants to move up to that wave 5 target there around 440. So I'm going to go ahead and write that one down. Maybe we'll do 2 again if you all like NVIDIA or if you want to wait. But I'm going to put this one down, MPWR, for tonight as 1. Maybe we'll do 2 of them again tonight like we did last week. So at this point, I'll turn it to you, Zach. What everybody say about NVIDIA, and then we'll do the Q&A.
Sounds great. Yeah, thanks for a wonderful presentation there, Rob. Definitely a big fan of this one so far. So it's actually about a dead even tie between all the platforms we're live streaming to in our Zoom audience.
Oh, really? Okay.
You're going to have to do a flip of a coin or something there.
All right. So I'm going to just put NVIDIA question mark. And since it's a 50-50 one, we won't make it official, but I'll make a note of it. We'll see what happens over the next couple of trading days. And, you know, for our alert subscribers, I know that we have some that attend TradeFinder as well. That's why it didn't come out today. It may very well come out in a day or two. Just a little bit of a pullback or even something sideways. Just can't chase it when it's that overbought. When you're at 160 on the 10-day moving average, and it's 17 points away from the 10-day moving average, at least 15 points away. If it was 7 or 8 points, all right, let's do it. But that's just too many. And we may come back and say, well, that still would have been a good entry and you missed it. Okay. But more often than not, waiting when it's that overbought is the prudent thing to do. So, you know, nothing's 100%. And we'll see how that plays out. Interesting that it's split. I kind of like that. I think that's healthy from a market standpoint as well. So MPWR will be our official one, and let's do some questions here with the time we got left.
Sounds great. And I do see we have some hands up at the moment. And as much as we would love to hear your voices in this session, we just unfortunately don't have enough time. But please feel encouraged to raise that hand again for the insiders, and we would love to interact with you there. So while we're on or talking about NVIDIA, I'm just going to give you a well thought out question here from David. Hey, Rob, I just wanted to get your thoughts on NVIDIA. We closed with an extremely bullish candle today over the 200 EMA on the daily. It does seem like we are a bit overbought relative to the 10 EMA. Today's volume was just about average volume. If we look at the weekly, we are currently over the 50 EMA. The ADX also saying buy. There also is an interesting inverse head and shoulders on the daily and weekly. It seems like a lot of bullishness, even though the SPY has been pretty choppy. Thank you.
Yeah, I agree with everything you said. Yeah, you got it nailed. The only thing that's missing, right, is the 50-day crossing the 200-day, the golden cross, as they call it. That's the only thing that's missing from it, which looks like it'll happen anyway. But yeah, it's just it closing on the high when you're overbought is usually a time when it's ripe for a little bit of a pullback. It might even be an intraday pullback. You know, sometimes the stocks will come down intraday and then turn and go back. So we got to watch for that as well. I just couldn't pull the trigger. It literally was queued up on the screen to send, and I just couldn't do it because it's too far away from the 10-day moving average as much as I wanted to. Like I said, I may regret that, but I don't think so. It's a lot overbought. But as you said, everything is screaming buy on NVIDIA. And like I said, I know that makes Zach smile. So, you know, we'll see how this plays out over the next day or two. And whether it come back and say, you dummy, you should have done it, or wow, that was really good, staying prudent to your rules, and look, you got a little bit better entry. Well, you know, again, and you know, we'll see. That's one of the things about doing these, and I like doing these, is accountability. You know, I give you my viewpoint, I tell you I'm wrong. You know, I'm right a lot, but I'm wrong a lot, and you guys see it's all there. I give you my viewpoint, and then you can see how things play out, and you keep coming back week after week. So there's something we're doing that you like, and we appreciate your attention. So anyway, let's get off NVIDIA and go to something else. We spent enough time on that.
Absolutely. So we'll go over to PANW for Will.
Oh yeah, that's a really good one. I've been wanting to look at this one myself. So this is cybersecurity, and you can see, yeah, it's been crushed. Pretty rough move down there. Look, a lot of things here look really bullish to me. We came down, we had this vertical move lower here. What's rule number 2? Rule number 1 is no security in any time frame gets very far away from the 10-day moving average. And rule number 2 is vertical moves get retraced. You just write those two things down and add those into your trading. It will improve your trading if you get nothing else out of these things. But when you look here, we had a nice consolidation following that vertical move, and now we're starting to move. Bit of the blast off kind of the launch pad effect. Our subscribers are aware of that. And then also we've got pretty good separation from the 10 and the 50-day moving average. That doesn't last long either. You can look at, you know, just like the 10-day moving average here. Look what happens when the 10 crosses the 50 for too long. It always comes back to it, whether it's above it or below it. And that's more severe than any of these moves where it went back to it. So I think that the wave 4 bounce, and you know, remains to be seen whether that wave 5 pattern stays intact, but I think this is a good solid bounce. You got a lot of room to move here, probably up to 155, 160 here. In addition to that wave 4, I like it when you see this, the wave 4, and this is a projection, right? These are projections. That means if the wave 4 starts now, which it looks like it is, this is where you could look for it. And when those set up right in the area of a resistance area, that's just a little added, it's like the cherry on top of a sundae or whatever. As far as it looks like that's a logical place for PANW to go. So up towards 160, and it's in the space that's probably going to be seeing some money rotation now. So I like this one a lot to move up towards that level. I'm very long-winded. I didn't mean to take up that much time on it, but I felt like there was a lot of things to talk about that are constructive there. And so I like that one to move up towards that 160 level.
All righty, no worries. I'll try to get through as many as we can here with the time remaining. Question here from Peter from Zoom is, shouldn't ADX be supportive indicator for a strong move? If yes, so how did you come to look at that indicator during the corrective wave 4 in cost? I'm confused. Could you explain? Thanks.
Sure. Let's go back and look at Costco. And remember, it's more than just the ADX. So you take everything into account. And so I'm not sure what you didn't like here. See, what happened, the way this worked is it was, and I don't like the DMI on downward moves. Remember, because the DMI is a bit slower of an indicator. It's a lagging indicator. The CCI is the one we look at for fast moves because that's very responsive day to day. The DMI is a great indicator. It's probably, other than LA Wave, my next favorite indicator. but it is lagging. And so I don't look at it on downward moves because the market tends to move so fast to the downside. It's almost like the DMI can't keep up, but it's great on the upside. Well, we had a reversal here. So the ADX was moving up with this negative directional indicator on top with this big move lower. Well, then they crossed. So the bulls took over. There was a changing of the guard here. The bulls took over. We went vertical. We broke to the upside. Now, notice when it first broke to the upside, the ADX came down a little bit because it's resetting as well. It's like, wait, what's going on here? There was some strength to the bearish side, and now the strength's to the bullish side. So it came down a little bit as it was resetting, and now it's ticked back to the upside. Now, remember, the ADX measures strength. It doesn't measure direction. It only measures strength. So if that was confusing you with the fact that the ADX was going down, that's not what it measures. The two directional indicators tell you direction. The ADX measures strength only, not direction. So the fact that it's ticked up now tells you that whatever's going on right now has some strength to it. And what's going on right now is a bullish move with this changing of the guard here with the two directional indicators and the fact that the positive directional indicator is moving up and the negative is moving down. So you had a tick up in the positive directional indicator, a tick down in the negative. That's a clear sign that the bulls are in control of this right now. And that is now confirmed with this tick up in the ADX saying, yes, there is strength to this upward move. So I hope that helped to explain.
Thanks, Rob. So this next one here is a few requests, and that's going to be CAT. It's becoming one that we look at for every session.
Yeah, well, I mean, this is one I've been wrong on. So, you know, the breaking above 240, I didn't think would happen, and it did. And so now we're up at 260 and we're overbought. The DMI looks pretty good. Now it's got earnings on the horizon, and I think that's going to be the catalyst. If it's going to go down, that's when it's going to go down. I have no idea why it's going to there's no fundamental reason for this to be occurring. And so if you're a big fundamental person, then you look, okay, earnings is going to expose that, right? If it's going up and there's no fundamentals behind it, it will be exposed on earnings. So that's going to be our key. And so I just I don't know until we get to earnings. It's surprised me. I've been wrong on it, that it moved above 240. I didn't think that was going to happen, and it did. So, you know, we'll find out. It's at a 50% extension. It's pulling back. It's overbought right now. Likely comes back to test 240. We'll see what happens when the earnings report comes out here in the near future, and see if that exposes the fundamentals. You've still got this big gap right here to get filled. I don't know. You know, I just shake my head on this one. I don't get it. So
yeah, I hear you there. And
I look for the earnings report for vindication. And if I'm not, I'm 100% wrong on this one if it doesn't get vindicated on the earnings. So I don't know. It defies logic to me. That really bothers me. I view myself as a logical person. You have to keep your head out of that, though, when you're trading and you trade technicals. And, you know, it looked like we were done here. You can see the ADX had broken below 40. It was above the positive. Every signal was telling you that this move was over. And so consolidating at 240, that happens a lot before it starts to break down. Everything looked perfect to break to the downside, and then it turned and went higher. So I don't know. I've just been wrong.
No worries at all. I think everyone appreciates the honesty there. I know you said you wanted to wait till earnings, but just as a closing comment, Chris is looking at shorting it, so I don't know if you had anything to add.
Well, that's what we're going to do. We're going to short it into the earnings report. It's overbought now. So if you wanted to go ahead and do it now, we probably will do that in the next day or two as well. We're going to add to our downside position, which is a disaster right now, obviously, but we're going to add to it and see what happens on the earnings report. It's not going to explode higher. I don't think that happens. So I think there's not a lot of risk of shorting it going into earnings. You know, it's already had such a strong move. It's one of those things where it would have to absolutely blow earnings away to continue higher, which is possible, you know, maybe, I don't know, you know, but I still have the same viewpoint and I will if the earnings come out and it just blows them away. I'll just have to say that it's just one of those stocks. Every now and then you get those stocks that are like a needle in your neck, and you're just wrong on them, and they bother you, and you get it wrong, and you finally just have to walk away. But it'll take the earnings showing really strong fundamentals for me to do that. And I just feel like, anyway, my long-winded answer here is I think the risk to reward is good on the short side, because even a good earnings report, I don't think it explodes higher. So I don't think if you short it now, it hurts you too bad if we're wrong. But the opportunity is good. If it misses, it's going to tank. And that's when, we can have vindication there. But we'll see. We'll see together. I mean, you guys ask about it all the time. I get it because I've been wrong on it. I understand it. So, but I do like the idea of shorting it now.
Thanks, Rob. And just one more on shorting is going to be Ulta, also for Chris.
Okay. Nicholas used to be our short guy. He was always the one coming up with looking for shorts.
Yeah, we miss Nick.
Yeah, we do. So here is he moved away, if y'all are wondering what time he moved international. So looking at Ulta, it's right at that 50% extension. This is when it's an early sign. I just want to be careful here. I don't like shorting this one as much as Caterpillar, but I understand the desire to short this. The ADX is broken well above the positive directional indicator. Now that tells you the strongest part of the move is over. It's not supposed to tell you that the move is over until the ADX turns back down and it breaks below 40. Well, it never got above 40. So if it rolls over now, that's a signal. So if you wanted to be a little more cautious, you could wait until that ADX rolled over. But remember, the negative is it is a lagging indicator, so it probably will have moved down a bit before that ADX rolls over. But you do have an early sign that the upward move is likely over, but that doesn't necessarily mean it corrects yet. So it could creep higher is what I'm trying to say. When it tells you the strongest part of the move is over, it doesn't mean the whole move is over. It means that it could still creep higher. But same thing from a risk to reward standpoint. I think this one would be a touch more speculative than Caterpillar, because you could drift a little higher here on this one based on what the DMI is showing us. But I don't think you have a lot of risk to the upside. I don't think it explodes higher. It just would creep higher on you if you're wrong. You look at the CCI, it started down from a pretty high level. So from a speculative standpoint, I think you could take a shot at that one as well. All right, it's 10:01 and my voice is rough from already doing one of these earlier, but let's take one more. You pick, Zach, and then we'll call it a night.
Oh, I was on mute. That's important.
Yeah, it doesn't work.
Nope. Yeah, got to unmute. So no worries at all. We'll finish with this last one here from Curtis on Zoom on the EEM. What's your thoughts of CCI versus DMI?
Okay, so we looked at EEM earlier, but I didn't look at our indicators. So let's add those in there. Well, we did look at the DMI. So the DMI looks good. So they're asking about the CCI. I see why you're asking, because it is coming down from an extreme point. And this consolidation here, if we get down towards zero, now remember the EEM is a little bit overbought. So some more consolidation would be super ideal. Even a little bit of a pullback is okay. We get that CCI back down towards zero. It doesn't have to make it all the way to zero, but it's better if it does, because see what happened last time? See, when it came down here to zero on this last consolidation, this is a really good one to finish on, by the way. I'm talking about the CCI. So we consolidated here and we consolidated around zero, and then it took off again and the CCI took off. Well, what would be ideal is for that exact same thing to play out again. So we go through another little consolidation here and the CCI comes back down towards this area around zero. Whether or not it goes sideways again like it did before or not, that's just a couple days that you have to wait in there, and then take off again. Just exactly what it just did would be ideal. And then we would be kind of stair stepping to the upside. because you can see it likes to do this. It went up, sideways, went up, sideways. So it kind of likes this stair step fashion. So that's what I see on the difference between the CCI and the DMI. Well, I really feel like we did a lot of good educational stuff on this session. Thanks for everybody for spending your time with us on all the varying social media platforms. I've lost track of them all. There's so many that we're able to stream to now, but thank you for your time. We appreciate it very much. Time's so valuable to each and every one of us, and we try to make it an educational, informative use of your time. I feel like we did a good job on that tonight. I hope you do too. Have a great rest of your week. Look forward to talking to you again.